And good afternoon. Welcome into Market Talk for Tuesday, February 9th, 2021. A good afternoon to you. I'm your host, Jesse Allen. Thank you for joining us here on a USDA report day. We got a lot to talk about here on the program. You can find us online, markettalkag.com. You can also find us on Facebook, Twitter, and Instagram. It's all at Market Talk Ag. Well, I mentioned a busy day today with the USDA reports. We saw March contracts of corn, beans, wheat all trade higher before the report. By the end of the session, only beans, soy products, they were left with higher closes on the day. Let's talk about it. Let's bring in our good friend Jim McCormick with agmarket.net. And Jim, great to have you on the show here today. And man, oh man, interesting report day to say the least. And I just want your initial thoughts on what we saw with this trade today with the report. I was pretty surprised in a few areas that I know we'll dive into.
Well, I think the first thing you probably say more than anything else on the corn market specifically is we probably had a classic buy the rumor, sell the fact kind of reaction to the report. Jesse, I think a lot of people plowed into the corn market yesterday, kind of remembering what happened in January. January, we'd rallied a little bit into the report, paused a few days, and we had obviously that limit up report day and then stronger the next day. I think a lot of people bought into the report today, anticipating another bullish reaction to the report. Unfortunately, the government just did not feed the bull like they were thinking. The traders thinking this demand would be revised up dramatically due to the China buying. They only revised it up about 50 million bushels. So your carryout now is about 1.5 billion. The traders guessing closer to 1.3, 1.35, hence the little bit of weakness in the market.
Well, let's talk corn specifically here, Jim. And I know a lot of folks were expecting a number closer to 135, 14 on corn. And then we get this 15 number. I mean, is this USDA? Are they kicking this can down the road when it comes to corn? Or is there something more to this story that we're just not seeing or we didn't see ahead of this report?
I think in general, they kind of kicked it down the can down the road. The USDA had a choice, I think, with these big exports we're seeing. They could have just come in here and really made that hard adjustment and raised demand 250, 300 million bushels, like the trade's thinking. What they chose to do, they raised it by 50 million, which that probably means, folks, is they'll raise another 50, 100 million in March, then they'll raise another 50 million in May, and then maybe by the time, in April, then maybe in May. And by the time we get to the end of the year, that balance sheet will probably be closer to 1.2, 1.3 carry out, I believe. It's just going to take time, and they're just going to slowly walk it up, the demand, and walk down the index stocks.
Now, I know you and I were chatting a little bit before we got on the air. You did see some interesting things that the USDA did with the China numbers that I think we should talk about. Can you explain that a little bit and give some of your thoughts on it?
The China numbers are definitely interesting. The USDA has been behind the curve on the export demand to China all year long. They're finally getting a little bit closer to it. The USDA was saying China was going to import 17 million metric tons of corn. They actually raised it up to 24 million metric tons, which we think is very close to in line with where they're at. We think they might have bought as much as 27, 28, but this number is really clear in the ballpark. But what was really surprised everybody is they made some adjustments. They raised the feed demand, made some other adjustments, but the net effect, Jesse, was they actually raised the ending stocks by about 4.5 million metric tons. So now they're back to about 196 million metric tons of ending stocks. But what makes this interesting, folks, is a year ago, the ending stocks were around 200 million. So the net right now, Jesse, is they've lowered the ending stocks about 4 million year on year, but the price has rallied about $4 to $5. Corn last year in China was trading between $7 and $8 a bushel. Today, it's just between $11.50 and $12 a bushel. So to me, that seems like an awful strong price move for about a 4 to 5 million metric revision of ending stocks, which tells me, folks, in the long run, that China carryout is probably going to get a lot smaller if they ever come clean.
Yeah, very interesting on that front. And overall, and looking at, the world ending stocks on corn, not many changes there. South American corn production wasn't changed in this report. And in the grand scheme of things, looking at today's close here on our futures, I mean, 7 to 8 lower in the old crop and down a little bit in the new crop. Corn really did kind of rally there late to at least close off session lows. And I think that was at least a good sign to wrap up the day, even though we were lower.
100% agree. I think some of the strength definitely came from the bean market. The bean market, we'll get into that in a minute, definitely came off the lows, closed 14, 15 higher. But the corn market was 10, 12 off the lows. Technically speaking, it kind of went down near last week's lows and it held. If you think about today's close, it is still be the second highest close of the move. So we gave back half of yesterday's kind of run up into the report. in general, I think you can still have a bullish bias. Our target on this corn on the March contract, just based on the swing objective, is about 590. So we think there's still a very good shot this corn market's going to continue to grind higher. We've noticed it has matched the '08 market action quite well. So overall, until we know for sure we've got a crop, I think the bulls still have a grasp of this market.
Yeah, and I think finally on corn, if I'm a producer who is sitting to watch this report here today, what would you tell them? I would assume don't panic seeing these numbers today, and especially with this close, it's something to kind of remain disciplined here with this market right now.
Right now, if you're a producer and right now it's just how much what do you want to lock in profit wise? It's not price, it's profit, as we like to say at agmarket.net. The profits are there, but if you're trying to say which way you're going to go, I think as a producer, you got to feel pretty good owning cash corn right now. I think the basis is going to be very, very stout. If this carryout drops down to the 1.3, 1.2, like a lot of people think, we're in that camp. It's going to be very, very hard to procure the grain. The one thing I would tell producers out there to keep an eye on the spreads. We do anticipate to see a lot of bull spreading. You'll see people buy in May, sell in July specifically. So what's going to happen is we get into springtime, Jesse, and they're essentially trying to encourage producers to sell grain, to essentially bring grain to market, to essentially export out to China with all those purchases. What are they going to do? They're going to drive that May price up, drag the July down. So essentially, if you store your corn into July, they're almost going to penalize you. So as your producer, kind of keep an eye on that. Basis will be strong from time to time. Don't be afraid to lock it in as well, and book these profits.
Let's move over to soybeans here, Jim. And today's USDA number, 120 million bushels. They lowered that ending stocks 20 million bushels. Also tied that to a 20 million bushel increase in exports. But overall, that number came in pretty much right about where everybody was expecting that number to come in. I know some folks thought maybe even lower yet, but it seemed like 120 was a pretty comfortable middle of the road number for what everybody was expecting. Is that kind of what you thought?
Yeah, I think the average trade guess was 123. They came in at 120. I think that's kind of their comfortable slot. They had to raise demand just based on how much we'd already sold. So they raised it by 20 million. I would not be surprised to see that demand continue to be tweaked up over the next couple months and see that carry out eventually maybe dip below 100 million. But I think it was kind of a good middle ground for where we are right now. And the fact of the matter is that's actually a very bullish number. You're looking at a stocks use right now at about 2.5%, 2.6%. There's only been a couple of years stocks use were that tight. One year we went to $16 beans. The other year we went to $18 beans. So if you look at the historical numbers right now, the bean market actually looks a little bit undervalued at this time. I think the market's struggling a little bit right now based on a tight stock situation in the United States versus we are harvesting beans in Brazil, which is kind of capping us. But the fact is we're going to be down to the bottom of the barrel at the end of summer. And if you own beans right now, I would expect the basis to continue to be a little bit stout as they try to pry it out of your hands.
Well, and looking at soybeans today at the close, I know that that March contract was up 14, just over the $14 mark. But you look out to some of those numbers this fall, September, November, January. I mean, we're sitting November 11.90 and 3/4 at the close today, up 11. September 12.43 at the close, up 9 3/4. So we talk about growers not having a lot of old crop soybeans, but looking out to new crop. There's some good numbers here today and a decent move off of this WASDE report today, Jim.
There definitely is, and that's something the producers need to kind of keep an eye on. I mean, I know a lot of people are very bullish on the old crop. I know we are, but the next debate really, Jesse, is going to be acreage. And I know that seems like, holy cow, it's a long time, but the fact is we're going to get the U.S. Outlook board meeting where they kind of give their first guess of acres at the end of next week. And so we're looking for big corn acres and big bean acres. So, I mean, when you're looking at beans near $12 for new crop beans, there's a lot of profit potential to lock in. We would encourage using some kind of vertical call spreads maybe to maintain some ownership, because with the area out as tight as it is, any kind of weather situation this summer, this market could be explosive. But the fact of the matter is, we're going to produce, we could produce a big crop 6 months from now. Then on top of that, Brazil's going to produce a big crop. So the producers out there do not get away from the idea to lock in some profit, but do manage to keep that upside open.
Let's talk about South America here real quick and kind of factor in their quartered soybean discussion. We're getting some delays to start harvest in Brazil and, hearing some slow starts to the export season there. USDA left Brazil and Argentina production unchanged on soybeans and corn. What are some of your thoughts with what you're hearing currently out of South America and how that's going to play into our markets here in the near term?
Well, in the near term, the delayed harvest definitely maybe gives some opportunities, some quick shipments going out of our areas. Right now, Mato Grosso, the big state down there, I think has roughly got about 4% of that crop harvested. I think last year they're way 25, 30% harvested. Our research group is telling us that the Paranagua port is getting roughly 100 trucks a day. At this time a year ago, they're getting 1,000 trucks a day. So if they cannot ramp up their export pace quick enough or get the supply going to the ports quick enough, there's a decent shot. Maybe we'll get some more flash sales out of the P&W to quick shipment to China, which is just demand that we really can't afford to give. So that should be a little bit friendly. I would expect that crop to get a little bit smaller down the line, but I think the USDA kind of did what they did in February, traditionally do in February, kind of kick the can down a month. But right now, when you look at some of the greenness charts out there in Brazil specifically, I wouldn't be surprised to see this crop get cut a couple million metric tons when it's all said and done.
Let's shift over to wheat real quick. We don't want to forget our wheat growers listening in out there. And I know USDA left wheat production unchanged from the January report. They also left wheat demand and use totally unchanged. But USDA did drop global wheat ending stocks. And even though, we throw that in with some of these cold weather concerns, maybe some winter kill worries in the U.S. and in Russia, I know wheat were lower today, but again, they bounced off the lows of the session. What are your thoughts with the wheat markets here after the USDA report today?
Well, like I said, the USDA didn't give us anything that's really too exciting one way or another, but the market broke on it, came back, held support. I think with the bitter cold temps we're seeing, you got another round of really cold temps coming in this weekend. You got, like you said, you got problems in Europe, with cold temps. I think that's a little bit friendly. We got to keep an eye on the dollar. As the dollar strengthens, it hurts our export demand a little bit. It weakens, it improves. But in general, I think the wheat market is going to be a little bit nervous to see with this bitter temps what kind of damage may or may not get done, as well as just the fight for acres. I mean, the fact of the matter is, if you get a big surge of corn into a big surge of corn prices into the spring, is there going to be a temptation to rip up any wheat that looks a little bit marginal to try to plant plant corn, maybe plant sorghum? Because we're hearing such incredible premiums of sorghum over, into China. There is definitely an acreage battle between all these commodities.
Yeah, and that's great you mentioned that. Again, I know you alluded to that earlier, but that acreage battle, that outlook forum, that's going to be the next milestone on the road here. Corn, soybeans, wheat, sorghum, milo, cotton. I mean, you name it. We're looking at a really interesting story shaping up here in the U.S. It looks like, to me anyway, here over the next couple of months, Jim.
I 100% agree. When you look at everything, I mean, I don't think the market's trying to figure out where we need to go to plant acres. And right now, when I look at corn, I look at beans. I think in Iowa it's going to be really interesting. I mean, we've heard some, because of that derecho came in. I mean, I had one customer tell me, a big operator runs over 10,000 acres of corn and traditionally does 90% corn on corn. He's going to 50-50 rotation this year simply because he had so much down corn. He's getting forced into beans. And what we're hearing from some of our contacts in the seed industry, we're going to see a big increase in bean acres in Iowa. So you're going to lose some prime corn acreage to beans and pick up some bean acres. And then it's just going to be a debate of where we're at. So even getting the crop in the ground, then it's a matter of dryness issues. And one other thing, folks, remind you, it's not just U.S. dryness. Brazil's harvesting their bean crop 3 to 4 weeks later than normal. That means, Jesse, they're going to plant their safrinha crop, their second crop, which is a crop they tend to export 2 to 3 weeks later than normal, which means instead of harvesting in July, they're going to harvest that crop late July into August. So we got to watch their crop this summer. We're going to watch our crop this summer. And as for the China, the USDA put the carry out at, like I said, about 196 million metric tons. The United Nations Food Group put their carry out at 139. So I lean to think the 139 is a little bit more accurate. Now, what if China has a weather issue next year again? So this is going to set up for an incredibly exciting and volatile year, plain and simple.
Very, very true. Let's move to livestock, Jim. And today's WASDE report, higher beef and pork production shown in that report. And feeder cattle had a decent day as well, kind of going off the lower corn prices. We were up aggressively there at one point, and we still finished with good strength in that feeder cattle market. And I would say that probably wasn't too surprising. Lately, we've been seeing those moves with corn going lower, feeder cattle's been going higher.
There's no doubt about it. The feeder cattle corn spread's been very active. When the corn goes up, feeders drag. We saw that today. We did see a little bit of profit taken in the live cattle. The hogs, it's interesting. They're way ahead of the cash index. The market's probably a little bit overbought in those markets, but we're seeing some pretty good export demand, which is supporting that market. And then I think there's still, just in the big picture for the protein, there's a lot of people fearful of inflation coming in this year. When you look at the high stock price market, you look what the dollar's doing, the printing of the money, the stimulus we're seeing, inflation is a legit risk. And what are we seeing? We're seeing a lot of fund money come into these markets as a way to hedge off inflation. And they're definitely buying the protein market, hence giving us some decent support in those markets.
Yeah, and looking at the cash cattle trade, we've been higher the last week or two and looking for higher prices again in feedlot country. Not seeing much activity yet, and I'm guessing with the cold weather, it's going to be interesting to see what we get in the feedlots tomorrow and through the end of the week. And that's another factor we got to look at livestock as well with cattle and hogs. This cold weather is not going to help things out there in feedlot country.
It's not. I mean, it's a miserable out there right now in these single-digit temperatures and negative wind chill factors. The livestock don't do it. It doesn't put on the weight as easy. You use a lot more feed. So yeah, this might actually help maybe some of the cattle situation. A lot of those cattle are getting quite heavy, and slowing down the weight gain near term is also probably a little bit positive for the market. Kind of the hindrance for the producer out there. Definitely, the livestock don't like it, but that is a little bit supportive price-wise.
And one more note I wanted to ask you about on hogs. It seemed like hogs, you mentioned, at a premium to the cash index. It seems like traders are maybe getting a little hesitant here with this hog market, wondering how much more room we have to go. Is that kind of what you're seeing when you look at some of these charts in hogs right now, Jim?
It feels like we're a little bit overbought. We've kind of got to get that next kind of gear higher of demand. Now, the one thing we're watching is what's going on in China right now. There's several stories. We've heard some African swine flu starting to pop up again. We've also heard some hoof and mouth disease, as well as the PED virus showing up. So there is some reports that you are seeing some hog liquidation going on in China, where some producers are dumping hogs now, fearful of their livestock getting sick. And the real question is, if there is a shortage and have some liquidation, will that bring another round of buying of Chinese coming back in? They do have their lunar holiday coming up, but when they come out of that lunar holiday, if they've emptied out the reserves, maybe we see another round of buying from China potentially.
Well, a lot of things to consider here with these markets moving forward. And Jim, always appreciate your commentary. Any other final thoughts you have for our producers today?
Right now, I think my best thoughts of producers is just like I said earlier in the day. It's not price, it's profit. Don't be afraid to lock in profit, but buckle in this year. It is going to be an exciting year, I believe. I think there's going to be a lot of opportunity. And, if prices go high enough, don't remember, you don't have one crop to sell. You ought to think about selling some of that 22 crop. Because the one thing we do know is high prices do cure high prices. So don't be afraid to build out your game plan for the next couple of years if you have that opportunity.
Well, Jim, I know you guys are able to help producers across the country if they need any advice with their marketing. You guys have a lot of great resources available, not only on your website, agmarket.net, but I know you guys have your app as well.
Correct. You can go to the AgMarket, any of the Apple Store as well as the Google Store, and get our app. It helps you market your grain and kind of track your break evens. And I think it's a great tool for as we go into a very exciting trading year.
And you can also reach out to any of the team at agmarket.net by going online to agmarket.net. Jim, appreciate the time as always. Stay warm, my friend, and we'll talk to you again soon.
Thank you for having me on. Good week. Have a good week of trading, folks.
Jim McCormick with agmarket.net, our guest today here on Market Talk. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great